Good afternoon. Thanks for joining us today on Thanksgiving. We have Discovery Metals presenting, which is really exciting because we actually haven't had them present since our silver conference in June. So it's a great opportunity to get an update on their 55,000 meter drill program, which I think they're mostly completed. I think in the release yesterday, they said that they finished about 44,000 meters. So a little bit about Discovery Metals. They own the Cordero project, which is their flagship project in Chihuahua, Mexico. And yeah, they're doing an extensive drill program. We're going to get an update on that. With me, I have Forbes Gemmell, who's VP Corp Dev, and Taj Singh, who's CEO. Before I hand the mic over, as always, there will be a Q&A period at the end. And so feel free to input your questions in the box at the bottom. And this presentation will contain forward-looking statements. You can find those on the company's presentation on their website. With that out of the way, Taj, Forbes, thanks for joining us again.
Thank you.
Having us.
And congrats, it's been a pretty successful program so far.
Yeah, thank you very much. It's been a busy year, and obviously the backdrop of the pandemic, we've still been able to push through, and it's been a really encouraging year in terms of pushing the project ahead.
Great. Well, why don't you provide a little bit of an overview of the company for those that are not familiar with Discovery, and then you can tell us what's new and exciting.
Yeah, I'll keep our presentation here pretty brief, and then we can take Q&A afterwards. So Discovery Metals, as you all know, we're focused in Mexico and focused on silver. Our flagship project is the Cordero project located in Chihuahua State on one of the most major gold-silver belts in Mexico. And there will be forward-looking statements. And now moving on really to the key parts of the message here. And we really think we've been able to show, to the investment community that the Cordero project really is a unique and compelling opportunity. And it's really a world-class asset. And there's three things that really stand out, and the combination of those three that really make it what we believe is a world-class asset. First, and we're going to be talking about these in the presentation, but first is margin. We've been able to show very strong grades over broad widths continuously through our drill results over the year. And then more recently, some very, very compelling high-grade vein potential, and we'll talk about that. Second is just the sheer size of the system. It's the fourth largest undeveloped silver resource globally, so very large. And then obviously the third point is scalability and the real torque the project has, and the fact that it's one of the few primary silver open pit mines projects in the world. So there's a significant resource expansion at higher silver prices, and we'll talk to that as well. Moving on, the basics of Discovery. We are located in Chihuahua State. You'll see in a major gold silver belt. These are just a selection of really long-lived, robust mines and projects around us. We are in the resource and PEA stage. And as I mentioned before, the size of the project in the 2018 resource and PEA, the resource in all categories was over 1 billion ounces of silver equivalent. And there's more details on the resource estimate in the appendix to this presentation. So that's where we're located in Chihuahua State. The other very key important part of our story is the strong cash position we have. We have over $80 million of cash in the bank, really to drive value through aggressive exploration, resource development, and also for future development of the project. Moving on, just to give a little background of the kind of who's kind of backing this and the investment backing. We are one of the 4 companies that's part of the Oxygen Capital group, and that includes Liberty Gold, Pure Gold, Sun Metals, as well as us. And Oxygen has had, outstanding and serial success really over the past decade, building 9 mining companies. 5 have been sold, crystallizing over $3 billion of value. So it's, really a group that's focused on data, focused on technical credibility. And it's a big reason that, we were able to attract a lot of capital, is the fact that there's been a lot of past successes of moving projects forward. Separately, also, I want to note that Eric Sprott is a very large and supportive shareholder. He owns 27% of Discovery, and it's one of his largest investments in the silver space. moving on now to the Cordero itself, we really think, Cordero ticks the boxes as being a platform from which we can execute on. And on a high level overview, it's 100% owned. So no messy option agreements, no JVs, no earnings. We own it 100%. The land package is very large, 35,000 hectares contiguous around us. The red area is the area where we're really focused on, the resource area, but you can see there's a lot of land around for infrastructure, logistics, potential other satellite deposits. And excellent local infrastructure. You'll see up on one side of the property is a major highway, 4-lane highway, a few kilometers from the project, and then on the other side, a power line. So very good local infrastructure. The topography, classic flat rolling northern Mexican kind of topography, scrub brush, very little vegetation, ideal for open pit mining and large scale projects. It's located in mining friendly Chihuahua state, which has been rated the top mining state in Mexico, one of the top, I should say, consistently, for ability to do business and the fact simply that it has so many mines in the state. And, we've seen the ability to do business and mining specifically has been very supported in the state. And then multiple property-wide targets. I talked about before the resource area only occupying a very small part of the land package. You'll see here, there's already several other targets in the orange. We've noted here, those are interpreted intrusive centers that need follow-up work on. There's been mapping and sampling done on them, but really no real follow-up work has been done on them. The real focus has been on the resource area. So we really think Cordero is all the ingredients to be a real district, a pipeline of other potential projects that could develop near and around the main resource area. And I'll pass it off now to Forbes Gemmell, who is going to be leading the charge on our technical report coming out this year. So I'll pass it off to you, Forbes.
Yeah, thanks, Taj. So look, we acquired the project about 15 months ago, and since then we've been very busy moving the project forward. We're about 40,000 meters into this 55,000 meter drill program. And our focus is really trying to define and delineate the high grade zones. And so that drilling is going to complement a lot of the historic drilling that was done on the property and will translate into a completely brand new resource model in the second half of next year, which will be incorporating geology and structure for the first time. So it should be a very robust, defensible resource model. Meanwhile, we'll also be doing some metallurgical test work. That's starting up in a few weeks here. We should be getting some of those results back in the first quarter, second quarter of next year. So that the previous met work confirms that the metallurgy here is very clean. It's very simple. There's excellent metallurgy. We feel there's room to improve the flow sheet by targeting higher grades, and that's what we're going to be focused on in the met program. So that met work plus the new resource model will translate into a completely revamped PEA second half of next year. And we're going to be looking on a very disciplined approach, start off with a sort of 10,000 tonne per day mill, which should have a very manageable capex, and then expand the mill once that capex is paid off. So a lot of news flow between these items over the next 6-9 months, culminating in two big catalysts second half of next year. So I'm just going to take a quick step back to what the project looked like before we acquired it. And as a frame of reference, we've got a plan map here on the right. So we're looking down from above. And this pit outline here shows the PEA pit outline from 2018. So keep in mind the scale. I mean, this pit is almost 3 kilometers of strike and almost 2.5 kilometers of width. So there's almost 800 million tons of rock in that pit. I mean, that's a giant pit. And about half of that is ore and half of that is waste. So a very, very low strip ratio. And what we're depicting inside this pit are all the historic drill traces showing assays above a grade of 20 gram per ton. And that was the cutoff grade that was used in the last PEA, is a relatively low cutoff grade. But you can see of the 260 odd holes drilled, pretty much every hole hit mineralization above that cutoff grade. And you can see the giant footprint that's been outlined based on the previous drilling. So we knew knew when we acquired the asset, this project had exceptional size and exceptional scalability. But our focus was really on the margin potential of the project and trying to understand if there's a good project here with good margins at $18 per ounce silver. So I'm just going to show this exact same plan map now with the exact same data, but looking at all the assays above 50 gram per ton. And you can see there's still a lot of mineralization, high-grade mineralization in that north corridor and in the south corridor at that higher grade. And that was really the light bulb moment for us, is that this project not only has exceptional size and scalability, but has fantastic margin potential as well. And so our drilling since acquiring it has really been coming in. You can see these big gaps up here in the northeast and in the south is confirming the continuity of this these high-grade zones. So I'm going to show you this exact same image now, but overlaid with our drill assay data from the 25,000 or so meters of assays we've collected so far. So you can see the before, and then you can see the after. And certainly, when you look at those big gaps that were there previously, we've been very successful in confirming that continuity. And so what we feel we're sitting on now is this high-grade bulk tonnage domain, which has about 1.5 kilometers of strike extent, which sits inside this much bigger pit, which offers the torque and scalability at a higher silver price. And our PEA is really going to be focused on the mineralization within this high-grade domain. And our objective with that PEA is to demonstrate Cordero will be a top 10, potentially a top 5 primary silver mine, a mine life of a minimum of 15 years in the lowest half of the cost curve. And we feel if we can demonstrate that, that will undoubtedly put Cordero in the position of being a tier 1 silver asset. So that's the objective of the PEA. We've still got another sort of 30,000 meters of assays still to come in. And the focus will continue to be plugging in some of these gaps in their previous drilling, as well as growing this sort of bulk tonnage domain to the northeast and to the south as well. So that's the margin. This is a scale around the outside, and there's a completely brand new part of the story that's really evolved just the last few months, and it's the high-grade veins. And I'm just going to show you the next plan map, show the same outline, but this time depicting the high-grade veins that sit on the flanks of that high-grade domain. And we've got in total about 5 kilometers of strike extent of these veins. And that's based on all the artisanal workings from decades old, sort of through the 1900s, 2000s, but only going down 30, 40, 50 meters. We started drill testing these veins for the very first time earlier on the year to test their sort of strike and depth continuity. And you can see just from some of our initial holes, some of the grades and widths we've been hitting. And Todos Santos is probably a good example. Our first 2 holes were 342, 344. We hit 1.5 meters there, almost 2 kilograms per ton. And since then, we've been stepping out. This last step out here to 352 is almost 250 meters there. We hit 3 meters of 570 gram per ton silver equivalent. So it's early days in the vein story, but huge potential to really enrich the bulk tonnage part of the deposit by supplementing some high-grade feed from these underground veins concurrent. So that's something we'll be working on through the remainder of our drill program, as well as through 2021. I'll just pass back now to Taj just to finish up.
Yeah, just back on the milestones and catalyst slide, just to wrap up. 2020 has been a very busy year, and we expect even more so for 2021 to be busy and continue to progress the project. Phase 1 drilling will continue through Q2, and as Forbes mentioned, we're starting metallurgical testing here shortly in the next few weeks. This will all culminate in a brand new resource estimate and a revamped PEA. Again, a brand new version of Cordero. Just a completely different project. And to be honest, we actually could have went to a PFS. The amount of drill data, the confidence of the data, both on the resource side, on the metallurgical side, et cetera, could have been PFS level. We've already looked at that. But we really wanted to position this as a brand new project, and that's why we're bringing out bringing it out as a PEA. And in addition to that, again, we talked about the large land package we have. We are, going to be letting our reconnaissance teams go out and start building up some targets for further drilling and potentially start drilling some new targets later on in the year, and that could add some real exploration sizzle to the story. So a lot of things moving on a lot of fronts for this story. So that concludes the presentation, and I'll pass it back to you, Deborah.
Sure. So as a reminder, if you have any questions, feel free to put them in the Q&A box. I've got a couple to start with. I think when we first met in the spring, you had two objectives or two theories that you had about the property. Can you kind of give us an update on how those have played out throughout the course of your drill program?
Well, basically our two main goals for this property. One was really to work on that high grade domain and really build that up. We thought there was a lot of gaps in the drilling that we thought we could fill. We thought that would improve strip, bring grade up, and it has. Like, we're running iterations every 15, 20 drill holes. We're running iterations, and there's vast improvements. And looking at our internal models, versus before the drill holes were put in. So that's one thing. And then the other part was the veins. We had always seen the veins were something interesting. We really wanted to test them, and we've now started to do that. And they can really add, they can really supplement the economics substantially as we continue to see how they evolve. So it's kind of the bulk tonnage targets, the high grade bulk tonnage targets, and the high grade veins, and we're doing them in both in parallel, and they're both moving along very well.
And I think you've had some really interesting, exciting results out of the South Corridor. Can you talk a little bit more about what you're doing down there?
Yeah, maybe I could jump on that one. So our initial drilling, was really been focused on that North Corridor. There was obviously a lot of good historic hits, but we're just starting to come now to the south here, and you can see certainly more sparse drilling. And there's this one hole about in there where we hit 400 meters of 135 gram per ton silver equivalent. So one of the best ever holes on the property. It was entirely mineralized throughout. And when we run our internal iterations, I mean, that's ultimately converting waste to ore. So rather than a $2 per ton cost center, you're now translating that rock into a $15 to $20 per ton profit center. So the delta is huge. So you can still see we've got some big gaps here to fill in the South Corridor, and that should be some of the drill results we'll be putting out over the remainder of our phase 1 drill program.
Okay, and you've mentioned that you had 30,000 meters still outstanding. Are those at the lab, or is that, I guess my question is that 30,000 of the 44 that you've drilled that are still outstanding, or 30,000 of the 55? Or you could just say how many meters you've actually released so far.
The phase 1 program the phase 1 program is 55,000 meters. We've drilled to date just over 40. And we've released a little bit over 25. The rest we've definitely experienced, as many of our peers have, delays in assays related to COVID. So those will continue to keep coming out as we receive them.
So you've still got a lot of meters to report over the coming months? Yes,
exactly. There is a little bit of a backlog in getting assays back, but a lot of meters still to come. And we've been very newsy throughout 2020, and that'll probably even be more so in 2021. Lots of news to come out with drill results. Are
you using a local lab or one in Canada?
We use a lab in Chihuahua, the ALS lab in Chihuahua. And even though, it's in terms of logistics, it's fantastic. It's close to us, but it's still been experiencing pretty significant backups. And talking to many of our peer companies, they've experienced the same thing.
Yeah, it's been a real problem all summer and fall. Okay, so can you provide some more details on your approach to the PEA and how it differs from the PEA that was completed in 2018?
Yeah, sure. So the 2018 PEA is probably a good map to show. This is the pit outline. So that assumed a 20 gram per ton cutoff, so quite a low cutoff. And I suppose to make that economics work, they had a very high throughput rate at the mill, so about 40,000 ton a day. And that translated to a 29-year mine life, but it also translated to a relatively high capex, around $600 million up front. So our approach is going to be more a stage expansion. You can see in the southwest here, this outline here, which is the best grades, and they're right at surface. And we're thinking if we put a 10,000 tonne per day mill around those grades, we should have a top 10 primary silver mine with very accelerated capex over a sort of 6 or 7 year mine life. And then once that capex is paid off, we expand the mill to 20,000 tonne per day, and then we push back to the northeast here and finally push back into the south corridor there at that high throughput rate. So very manageable capex, and I suppose we're looking at not only the NPV and trying to maximize that, but also being a single asset company, looking at the NPV to capex ratio at the same time and trying to pick that optimal trade-off.
Understood. I have a couple questions about the veins. So how deep are the vein targets outside the PI? I'm not sure what they mean by the PI, but maybe you can just talk about how deep the vein targets are.
Forbes, why don't you take that?
Yeah, so look, I'm assuming maybe outside the pit, but
that maybe there's a T missing. That makes more sense.
Yeah, that's fine. But our geological understanding is these have been the feeder systems to the deposit. And what we've seen here in the central part is they've hit very sort of permeable rock that spread the mineralization out over big areas. But up here, the rock is more malleable and it's kept those veins intact. So what that would translate to as far as depth goes should be excellent depth continuity, given these are the structures that have sort of brought the mineralization to surface. So these aren't your sort of shallow, low sulfidation epithermal veins. And some of the drilling, there's been a few random historic hits that have hit the veins down about 600 meters. We're to date only really drill tested them to 300 meters, but of some of these follow-up holes the next few months, we're going to be testing them down deeper than that. But we're fairly confident they should have good depth continuity.
And how would you intend to mine the veins?
Yeah, they would, outside of the pit area, those would be mined by underground methods. And again, there would be no extra plant capex. You'd use the same plant. So the mining would be by underground methods. It essentially starts at surface. So the underground development capex is very limited as well. So that's our kind of thought: open pit mining of the bulk tonnage stuff, and then the veins outside of the pit, get them by underground methods. And that those kinds of widths and grades you see are definitely, the widths are very doable from Mexico to classic Mexican underground mining, but the grades are actually very high. They can make money in Mexico off probably 1.5 meters, 1.6 meters. You can make money off 300 gram per ton kind of material. So the grades look very exciting.
And how much does drilling cost? Like, how much is 1 meter of drilling?
Yeah, it's approximately about $200 a meter all in. So that's including all the assay costs as well. So pretty reasonable, and we're well set up. We're right off the main highway there. The Parral, the nearby town, is a great source of local parts and supplies. There's a lot of choice of drill contractors in Mexico, so it's a pretty favorable setup in terms of being able to efficiently drill out the deposit.
Yeah, and just wanted to point out, we've been doing all core drilling since we've started, because we really want to get as much information as we can, and actually doing oriented core, different from the previous operators. And if you went to RC drilling, the $200 figure that Forbes said would probably be reduced by $50 or $60 a meter, so even cheaper if you went to RC.
Okay, and what relevance to company value do you see in the areas of future potential exploration, those that are off to the side of your core focus right now? I guess they're asking what value do you think the market's ascribing to it, and what value do you kind of give these other potential targets?
I think the market's ascribing zero value to it. Fairly certain of that. In the early day projects, definitely some sniffs, and you think there's 1 billion tons of mineralization right smack dab in the property. You hope there'll be some satellite deposits and projects around. It's a big, strong, mineralized system, but those are going to need some time to get them developed up to drill targets and get them drill tested.
Okay, and what value is there in your original properties? How will this be realized? A spin out or option out? And when do you think this might happen?
Our focus right now is Cordero because that's driving the most efficient kind of value increases in the company. Definitely, we do have a portfolio of other projects that the company started with in the nearby state to the east of Coahuila. That's what I believe the question's asking. And those projects, 3 of them are drill ready from a technical point of view. One of them, the Puerto Rico project, is still waiting on permits. The other 2, Minerva and Monclova, are ready to drill. We even have drill contracts already set up for them. It just so happened that we were ready to drill them when we acquired Cordero and kind of went all into Cordero. So those are ready, definitely ready in a position to drill. We'll continue to work on the permitting at Puerto Rico, and we'll make a decision in early 2021 what we want to be doing with those projects. But right now, the focus is Cordero.
And as you conclude your phase 1 drill program in Q1, what will be next steps? Obviously, you're moving towards PEA, but when will you have your phase 2 plans ready to go? And what are you kind of thinking in terms of the next steps in drilling?
Yeah, so I think there's probably 2 key areas we'll be focused on as part of phase 2. So this, assuming this is all the mineralization captured in the PEA, we're obviously looking to expand that. But upgrading any mineralization within that footprint that is inferred, we're hoping within that we're going to get to around 70-80%, maybe even higher of M&I. So upgrading that mineralization, as well as we've still got the veins to come back to. So right now our focus is really just outlining the skeletons of these veins. We've got about 5 kilometers of strike extent. So our thinking is, if we just sort of confirm that strike extent by drilling that's 100, 200 meters spaced, plus confirming some of that depth continuity, coming back next year and really upgrading that to a resource point of view through infill drilling, because we'll probably need to get it to 50 to 80 meter spacing to upgrade it to a resource, which is obviously quite drill intensive. But for now, our priority this year is drilling out the skeletons, and we'll look next year to really confirming that through infill drilling.
And how well capitalized are you to execute on this current program as well as your next?
Over $80 million in the bank and no debt. We're definitely in a good position to aggressively work on this project. Effectively, we're funded up to a construction decision, and we probably have a very sizable portion of the equity capital needed for the build of this project. So definitely in a very favorable position in terms of treasury.
And what kind of timeline do you think that would be until you have a construction decision?
So right now, if you assume the PEA delivers second half of next year, and then a lot of the work we're doing now is the PFS standard. So if we jump potentially straight to feasibility study and allowing 12 to 18 months, that's going to take you through to mid 2023 for a construction decision. So that's, I suppose, a rough guideline on an accelerated basis if we go straight from the current study to that feasibility study.
Do it right the first time, right?
Exactly.
Of the remaining 30,000 meters of drill results, what is the rough split between main pit and high-grade veins?
So it's about 2/3 on the main pit and about 1/3 on the veins. So I feel the key engine, the key driver to the project is certainly the bulk tonnage, but certainly there's a lot of sizzle to the veins on the sidelines for now. But that's a split right now, and obviously if the vein story comes together, that could change, but that's a rough guideline based on what we know right now.
Okay. And there's been recent news on Mexico potentially nationalizing lithium. Do you have any concerns in this regard?
No, Mexico we really don't see that as being a risk at all. Like Mexico's a pillar of the economy. Mining is a pillar of the economy in Mexico, and there were a lot of headline risk to mining when AMLO first came in, and nothing's really happened. I think a lot of it might have been part of the campaign. Mexico is a mining country through and through, and it's in our opinion, is still one of the best countries in the world, all factors considered, to mine it.
Well, I've run out of audience questions, and I've run out of my own questions. So I'm going to put you on the hot seat, Taj. Maybe you can summarize where Discovery Metals is right now, why people should care, why investors should buy, and what sort of catalysts we can watch for in the coming months.
So where Discovery Metals is right now is, as I truly think we're one of the top names in the silver developer space, definitely. We're very well known and out there. We're trading probably 2-3 million shares a day. That's something that's not a statistic that's normally brought up a lot, but our liquidity is fantastic. Obviously, share price has moved well. So we really truly think we are, showing the world that Cordero is a world-class asset. And I think more and more people are starting to really believe it. That's where we are. Why is it interesting time? Listen, the stock was, in the mid twos, like 250, 230, 250 a while ago. And silver's come back. A lot of the stocks have come back a little bit. We've come back in kind of 160, 170 range. I think it's a fantastic buying opportunity, very compelling opportunity. And I think your third question was, what was the third question? Sorry. Where do you want to go?
I think it's catalysts.
Oh, yeah. The catalyst. And then back to this slide, the catalyst, it's a big one. 2021 is a big year for us. I think it's going to be important to really be able to show people all of the work we've done in optimizing this project, and again, really showing that it is a world-class asset. And again, in a major mining belt. There's a lot of assets out there that technically are great, but are in maybe remote locations. This is literally in a mining belt, huge scale, size, margin. It completely ticks all the boxes. And in terms of comparing to other mining companies, we really think the execution risk is low on this.
Great. Well, I think we can leave it there. Thanks for your time. I think that was a really thorough update. You've done a lot of work this year. It sounds like you're about, halfway through your results, so should be a lot more to come. And yeah, next year looks pretty exciting. So congratulations on what you've achieved so far. And I'm looking forward to seeing the next drill holes coming out. It's been exciting this fall.
Thank you very much for having us, and happy Thanksgiving to everyone as well.
Oh yeah, happy Thanksgiving. If anyone has any other questions, feel free to reach out and I'll get those answered for you. And have a great afternoon.
Thank you. Cheers.
Okay. Bye-bye.